Oliver, the results of the UK bank stress tests are out, and everyone has passed, except for Co-op, but we knew Co-op was a disaster before, so that's not news. Should we be relieved, happy? Should we be pressing buy buttons here?
No, well, not many people have been pressing buy buttons today. The shares in the banks that passed rose a little early morning, but they're kind of flat at the moment. So people aren't jumping in. I think passes were expected. It would have been a big shock if they'd have failed. And more generally, I would question whether a past stress test is a reason to be a lot more enthusiastic about a bank. Stress tests by their nature are very speculative. The regulator running them picks a very adverse financial scenario in the future, a 35% fall in house prices or whatever it might be, and then has a look what banks would look like if that were to happen. But who knows if the scenario that the Bank of England has chosen is the one that will play out. It didn't, for instance, test for all kinds of ructions in the ruble or in the oil price, which is exactly
You never
what
know which combination of stresses you're going to get.
You never know which combination you're going to get. So you never know quite how accurate these stress tests are going to be. All we know is that under one particular scenario, the banks have passed, which is a relief, but not conclusive proof that we're out the woods.
Other than Co-op, if there was a bad piece of news in these results, there seems to be some reason now to question whether Lloyd's will be permitted to pay a dividend, even a token dividend, next year. Are these anxieties misplaced?
So Lloyd's passed the stress test, and the assumption in the market is, or at least consensus forecasts tell us, that a small dividend is expected to be paid out in March, declared in March next year based on the 2014 results. So they're expecting about a 1.1p dividend on a 74p share price, so not a huge yield. There's a question whether they'll be allowed to pay that. I expect they will. But then further than that, if Lloyd's is just passing the stress test, you have to question how much cash they'll be able to return to shareholders through dividends over the medium term. And certainly consensus estimates are pricing in quite a sharp increase in dividends over the next couple of years. And I wonder how safe that kind of increase is.
Lloyd's is a UK retail bank, Oliver. If I can't own it for the dividend, why on earth would I want to own it?
Well, it's had a very good run, Lloyd's, and it's outperformed a lot of its peers. You're right, I question the dividends. Why would you own it? Well, it's a play on a UK economic recovery. It's largely a UK domestic bank, and if the UK economy recovers, as it's appearing to do at the moment, Lloyd's is a great way to play that. It's not a particularly cheap way in at the moment.
Thanks, Oliver.